Let's take a deep dive into some of these charts and get ready for the upcoming week. This is Mike, the Tactical Stock Scalper. All right. So first we're going to look at Tesla. We're going to look at these from a macro level today. We're going to start off with the monthly chart. Each candlestick represents a month. Now, we've been talking about Tesla, and if it couldn't get back above 180, that the next level of support is the 150 to 160 level, and it really makes a lot of sense for Tesla to fall back down there. And let me show you why. Number one, you see the red 100 EMA moving up there. It is at the 150 level that we see. Let me see this. That we see right here. See that? Right? So we have the 100 EMA racing up to the 150 level. That will provide some support on Tesla. Also, we have this candle here, and we had a bounce here. Let's draw a line here. See that right there? So, there is some proven support at the 150. If it breaks 150, we're going down to 100, and that is where the 200 period moving average on a monthly time frame will be. Also, we had some nice bounce there at the 100 level, right? But right now, the 150 to 160 level is the next buy zone for Tesla. If it falls down there, we'll have to see what happens. So I'm just going to go in here for just a second on the daily time frame. And we talked about if it held below 180, that's probably where we're headed is the 150, 160. And as you can see here for 3 days in a row, it is held below 180. So, if we don't get back above 180, hold 180, we are definitely heading down to that 150, 160 level on Tesla. Let's go look at SPX. There you are. Zoom out here to a monthly time frame. Okay. So SPX on a monthly is just flat out ripped for 5 months in a row. We'll be going on 6 months in a row here for too long if we do not get a pullback or correction. The next meaningful level of support on a monthly time frame is the 20 EMA that you see there in white. That is at the 4,500 level. It's got a ways to go before it hits there. I don't know if it'll actually go that far during a corrective period because there is so much support on SPX, right? So if we even come in here to the weekly time frame, we can see right in here we have some consolidation on a weekly time frame right in there, right? That will give us some support around a $4,800 level. Also, the 20 EMA on a weekly time frame is there. So if we do get some kind of corrective measure, this week or next week or whatever, that's where it could be possibly headed. And if we take a look in a little closer on SPX on a daily time frame, we're still a ways away from the 20 period moving average EMA on a daily time frame. And until it breaks it, and gets below the 20 period, really there's nothing to concern yourself with. As you see, it hasn't broken it since November, right? So it has stayed true, and 20 EMA has provided support. Imagine if you'd have just bought, every time it went to a 20 EMA, sold as it went up, bought every time it went to a 20 EMA, and sold as it went up, how much money you would have made. The 20 EMA has been incredible support for SPX. Let's go look at NDX now for all my QQQY people. We're also going to look at NVIDIA, which has been really fascinating. Let's zoom out here to a monthly time frame on NDX. Again, much like SPX, these markets move in concert. Sometimes, they differentiate a little bit, but by and large, they move in concert together. What we're having here, though, look, we're starting to have a red month, right, versus SPX, right? We see there. So SPX is the one you want to watch for right now for any kind of major downward move. But this is something that's really important here, is that we have to realize that now the monthly candle is turning red. What does that mean? Well, that means it looks like we could have some downside coming, but again, you got to wait for all the indicators and wait for the 20 EMA on the SPX to be broken. However, that's something worth noting, that we have that red candle on the monthly time frame. Look at here on a weekly time frame. Red candle coming in, still a ways away from any kind of meaningful support, so she could drop a bit. Zooming in here on a daily time frame. Look at that big red candle that we had Friday, coming down to touch the 20 EMA. Will it hold or will it go back up? We will have to see what happens next week. But, don't get too concerned if the NDX breaks the 20-period moving average, because as you see here, it is more volatile, and it has broken the 20 before. Not a big deal, but it is something to watch. Check out NVIDIA, and then we're going to look at the VIX today, okay? Let's pull up NVIDIA. Now, we've been talking about NVIDIA being 800 being support, as it's really the only meaningful, technical analysis we got on NVIDIA, because there's nothing out there to the left. So the reason why we think, or at least I think, I say me, that we think NVIDIA support can be there. Number one, we got the 20-period moving average moving up in a daily time frame that you see there in white. As you see, we have a line here. We've had some consolidation here where it was resistance and has now turned into support. The closer you buy to the $800 level, the better off you are. Let's look at this on a monthly time frame. Then I want to show you something here. Look at the seller's wick on this monthly candle. I mean, that is that's something to not be ignored. That's almost like a blow off top, right? Look how long that seller's wick is. It definitely had trouble once it started getting above 900, crushed right back down. I would definitely be watching the $800 level if NVIDIA gets back down there. And if it holds 800 and doesn't get below 800, you got to think it's going to take another crack at getting above 900. But yeah, you can't ignore that seller's wick up there. That is serious resistance up there. Let's check out the VIX. VIX has been, I've been keeping an eye on the VIX pretty much every day now, and we're going to go to a daily time frame first here. Why is the VIX important? Well, it shows a volatility in the market. And so what we're seeing here with the VIX, look at this. It is slowly, look at that. That's an awful trend line, but you get the point, right? We're creating higher lows, right? And we're also creating, at the same time, right, higher highs. Look at this channel that it's kind of in. So the VIX is trying to start creeping up and put some volatility in the market. The VIX goes higher. That means the market goes lower. Let's look at this on a weekly time frame. So as we can see here, there's that channel that we drew, and you can see the large spikes in the VIX, and that's when the market was really down. We're starting to creep back up. Nothing to really concern yourself with the VIX. It is something to keep in mind, but and to watch every now and again. But once you don't really get concerned until it starts getting above that $18-20 level, and then you need to raise an eyebrow. That really shows you that something is about to happen. Let's go look at the daily time frame again. So we had that spike up there a few days ago up to 18 and immediately got crushed down. So we're going to see what happens here at the VIX. But if we break out of this channel, get above 16 and hold above 16, we're looking like we're going to be headed up to 18. That means the market will be coming back down. But again, nothing to really get concerned about, whether it's just a pullback, a deep corrective measure. The VIX would look something like this. Let me pull this back out to a weekly time frame for you. it would look something like this, right? This is a deep corrective measure. Anything above 30 is basically a corrective measure also. So you don't really start raising that eyebrow until you get above 18 and 20, and then it's a great warning sign that you maybe need to get more defensive with your positions. I hope you enjoyed the content. This is Mike, the Tactical Stock Scalper, out.